Namaste dear students, welcome back. So today I am going to start the problem number 1 of corporate accounting 2. So that is accounting for a general insurance company. So for the first problem I am taking a question paper problem from November-December 2012 question paper. November-December 2012 question paper. So the question is, from the following balances of the Saumya General Insurance Company Limited as on 31st 3 2012, prepare a fire revenue account and marine revenue account as per IRDA, Insurance Regulation Act. So that is IRDA Act. So fire insurance, marine insurance in two different columns he has given. First one, revenue for unexpired risk on 1/4/2011. See, wherever you read 1/4/2011 or beginning of the month, beginning of the financial year, beginning of the calendar year, so that is considered to be a opening balance. That is opening balance. So revenue for unexpired risk 1/4/2011, that is opening balance. Fire insurance 15 lakh, marine insurance 50 lakh 20,000. Additional reserves on 1/4/2011. So again it is a opening balance of additional reserve, that is 3 lakh for fire insurance, 4 lakh for marine insurance. Claims paid and outstanding 6 lakh for fire insurance, 8 lakh for marine insurance. So that is claims paid. So insurance company have made the payment. Then commission paid 6 lakh rupees for fire insurance, 7 lakh rupees for marine insurance. Then bad debts 30,000 for fire insurance, 72,000 for marine insurance. Then premium received 36 lakh for fire insurance, 70 lakh for marine insurance. Management expenses 8 lakh 60,000 for fire insurance, 24 lakh for marine insurance. Commission on reinsurance ceded 1 lakh 90,000 for fire insurance, 2 lakh rupees for marine insurance. Reinsurance premium receivables 80,000 for fire insurance, 40,000 for marine insurance. Reinsurance recoveries 25,000 for fire insurance, for marine insurance it is nil. The additional reserve in case of fire insurance is to be increased by 10% of net premium. So this is the problem, dear students. So now we have to proceed with the solution part for this problem. As I have already posted in my last video, nearly 1 hour 5 minutes video, which I explained about the formats of general insurance company. See, if you don't learn the format, you cannot solve the problem. Try to understand. Without formats, final accounts of general insurance company or final accounts of life insurance company cannot be solved. So format is very, very important. So you should know and you have to learn the format. If you have learned, then solving the problem is very easiest task. Very easiest task. So I believe you have already practiced format part and you have already copied the format. So let us begin the solution part without any further delay. Students, let us start the solution part for final accounts or accounts for general insurance companies. So first we have to make a table for this. Let us prepare a table with the column Okay, so the first column and second column will have two columns, one for fire insurance and one for marine insurance. Okay, one for fire and one for marine insurance. So we'll have two columns. Fine. After that, schedule number. We need to have a schedule number column also, that we should not forget. So schedule number column. I have contracted schedule number column now. So now we have to solve the solution for this. Okay, so we have to find the revenue account, because he said in the problem at the beginning, fire revenue account and marine revenue account. He has asked only revenue account, so we are going to prepare only revenue account. So let me write the revenue account. So let us start. Revenue account, revenue account in the books of Saumya General Insurance Company Limited. So let us write revenue account in the books of Saumya General Insurance Company Limited. So General Insurance Company Limited. Okay, so this column is going to be particulars, then schedule number column, then we have fire and marine, right? So fire insurance, then marine insurance, here rupees. Okay, so now I have already shown you that how to prepare, how the format works in the last class, that is in my last video. You have already learned that how the format will be, right? So that is revenue account format. You have learned it or not? Yes, you have learned it, right? Okay, so I believe you have already learned. So by considering that, I am moving further towards the problem. But before going, I wanted to show you one more time. So this is the format which I have already shown you in the last class. So that is revenue account for the year ended. So this is a consolidated one. Correct? Income and expenditure. So whatever comes. So the detailed format in my first video I have already shown you. Again I am showing. In schedule number 1 you will have premium. So only premium we have to take. So and the adjustment I have already told how to treat the adjustment and all. Then in schedule number 2 we'll have claims, so that reinsurance accepted, ceded and all, net claims paid. So total cash, outstanding claims should be added, outstanding claims, opening should be deducted. So after that, even I have shown this part also as well. Schedule number 3 commission part, and schedule number 4 about operating expenses. So any other left out expenses also should be shown. So this is the format. So if you have already learned very well with this format and you know this format, so just you have to enter the item in that particular places. That's all the problem is. It is very easiest problem if you look at in if you know the format. So but if you don't know the format, then it will be bit difficult one. So that is why learn format and then we'll start the solution. That is what I said in my last video. So let us begin. So that is number 1, income. So what is the income part we will get here? So in this problem, what is the income we'll get? That is premium earned. Write down premium earned. Premium earned. Schedule number 1. Premium earned is schedule number 1. Under this we'll have premium. Write down premium. You have copied the question, right? Yes. So if you have copied the question, check out in the question premium how much? Premium how much? So that is 1, 2, 3, 4, 5, 6th item. 6th item from the top. So 1, 2, 3, 4, 5, 6. So below the bad debts you have premiums received. Premiums received. Mark as a schedule number 1 next to it and write the amount. For fire insurance how much? 36 lakh. For marine insurance how much? 70 lakh. Correct. So for fire insurance it is how much? 36 lakh. Copy that. 36 lakh. Then for marine insurance how much? 70 lakh. Copy that. 70 lakh. Copied. So next, reinsurance premium receivable or received is always add. Reinsurance premium receivable or received is always addition. So you have to add, correct? So that is how much reinsurance premium receivable or received. So that is 80,000 and 40,000, correct? So that is the reinsurance premium receivable. Second item from last. Second item from last, that is 80,000 and 40,000 he has given. So next to it mark it. So that is reinsurance premium receivable. Add reinsurance premium receivable. Reinsurance premium receivables. So how much they have said? 80,000 and 40,000. 80,000 and 40,000. So now add this to add both. How much you will get? 36 lakh 80,000, 70 lakh 40,000. 36 lakh 80,000, 70 lakh 40,000. Correct. Then add reinsurance for unexpired risk opening balance. Add reinsurance for unexpired risk. Reinsurance for unexpired risk. That is opening balance. Only opening you have to add. So don't get confused. So how much reinsurance, reserve for this is reserve. Reserve. So I'm writing here reserve for unexpired risk opening balance. I told you opening balance means what? Opening balance means 1/4. See, I told you to learn the format. I have taken premium from direct, that is then premium on reinsurance I have added. So then we are working on reserve for unexpired period, unexpired risk opening balance. So without this we are not going anywhere else. So we are not doing anything extra. So learn the format without fail. So reserve for unexpired risk opening balance, how much? The first item, how much? 15 lakh 50 lakh 20,000. 15 lakh 50 lakh 20,000. Correct? Yes. Next, is there any additional reserve opening? Opening only we have to add. Yes, it is there, second item only. So that is add additional reserves. Additional reserves. Additional reserves on 1/4/2011 he said. So that is 3 lakh and 4 lakh, correct? 3 lakh and 4 lakh. 3 lakh and 4 lakh. So now add all this together. So use the calculator. Use the calculator and add how much you will get. 36 lakh 80,000 plus 36 lakh 80,000 plus 15 lakh plus 3 lakh. 54 lakh 80,000, correct? So 54 lakh 80,000. 54 lakh 80,000. So next we have 70 lakh 40,000 plus 50 lakh 20,000 plus 4 lakh. So total how much? 1 crore 24 lakh 60,000. How much? 1 crore 24 lakh 60,000. 1 crore 24 lakh 60,000. Done. So now we have to do a small working note here. Okay. So that is less provisions for unexpired risk closing balance. So less provision for unexpired risk. Unexpired risk closing balance. So how much provisions for unexpired risk closing balance? Is that given? No, right? Yes, no. No. If they have not given, usually they don't give, so that we have to take directly. How we are going to take directly? See, there is a standard. What is that standard? So that is on net insurance premium received. So that is whatever net insurance premium received. So on that we are going to calculate. So how to calculate? That? 50% of 36 lakh 80,000. So only premium. So premium 36 lakh, reinsurance premium 80,000. So on this 36 lakh 80,000, 50% should be given for provision on fire insurance and 100% for marine insurance. Remember this, the rate 50% on premium received for fire insurance 36 lakh 80,000, 100% on marine insurance. So that is, we have to give the provision for unexpired risk as a closing balance. So apart from this, in the problem at the last line he said the additional reserve in case of fire insurance is to be increased by 10% of net premium. So on net premium again 10% we have to increase. Addition we have to increase. Clear? So that is 10% on we have to increase. That is what he has said. That also we have to check. Okay. Fine. So let us calculate this. So on fire insurance on fire insurance. How much? 36 lakh 80,000, correct? So now write 36 lakh 80,000 into 50 divided by 100. 50% is the standard rate for this. 50%. So how much you will get? Calculate. So that is 36 lakh 80,000 into 50%. So that is 18 lakh 40,000, correct? So I am writing here 18 lakh 40,000. So whenever I put bracket, that means it is minus. Okay, so this is for marine fire. So now for marine. So marine I said 100% on this 70 lakh 40,000. So write down 70 lakh 40,000 into 100 divided by 100, the same amount. So 70 lakh 40,000. 70 lakh 40,000. Clear? Any doubt? No, right? Fine. See, the additional reserve in case of fire insurance is to be increased by 10% of net premium, he has said. So that is on net premium we have to increase 10%, he has said. So on net premium we have to calculate now. So calculate 10% on net. So on net premium 10%, that is 36 lakh into 10%, 36, 3 lakh 60,000. Additional reserve in case of fire insurance is to be increased by 10% of net premium, he has said. So on net premium 36 lakh 80,000, 36 lakh 80,000 into 10%, that is 3 lakh 68,000. 3 lakh 68,000. So I am writing that is only for fire insurance, is said. So additional reserve, right? Reserve in the adjustment is said additional reserve 10%. So that is net premium 36 lakh 80,000 on 36 lakh 80,000 10%. So that is 3 lakh 68,000 plus additional reserve of 3 lakh plus additional reserve, because he said additional reserve, so that is plus 3 lakh. So put together it is 6 lakh 68,000. 6 lakh 68,000. 6 lakh 68,000. And for marine insurance he has given directly, that is reserve 4 lakh rupees. Reserve 4 lakh. So I am writing that 4 lakh directly. I am deducting. So here we have added. So here we are deducted, but while adding here, so 10% for fire insurance has been increased. So that I have identified on net premium 36 lakh 80,000, 10% 3 lakh 68,000 plus additional reserve 3 lakh on fire insurance. So 3 lakh 68 plus 3 lakh 6 lakh 68. But for marine insurance directly 4 lakh. So that 4 lakh I am deducting here. Okay. So now deduct both the figure, both the items you have to deduct. So deduct now, deduct 54,80,000 minus 54,80,000 minus 18,40,000 minus 6,68,000. So that comes to 29,72,000. 29,72,000. So for marine, 1,24,60,000 minus 1,24,60,000 minus 70,40,000 minus 4 lakh. So that comes to 50,20,000. 50,20,000, correct? So write down 50,20,000. 50,20,000. Clear? So after that, so we have to move towards expenditure part. So I am writing this as a total A. Total A. So this is the income part. I have completed income part. Okay. So next we are moving on towards number 2, that is expenditure. That is expenditure. Expenditure. So what all expenditure will have? So the first one will have what? Claims. So write claims. So claims comes under which schedule? Schedule number 2. Schedule number 2. Claims will come under schedule number 2. So take down claims paid. So how much claims paid he has given in the problem? Claims paid. So that is third item. Claims paid and outstanding. 6 lakh and 8 lakh. 6 lakh and 8 lakh. 6 lakh for fire insurance. Then 8 lakh for marine insurance. 8 lakh for marine insurance. 6 lakh for fire insurance. 8 lakh for marine insurance. Then less claims reinsurance recoveries. If any reinsurance recoveries are there, that should be deducted. So write down reinsurance recoveries. Reinsurance recoveries. Reinsurance recoveries. So you can just check adjustment treatment, point number 12. So I have clearly mentioned whenever reinsurance recoveries come, that should be deducted from schedule number 2. So which one I am doing? Schedule number 2. What I am doing? Deducting. So how much they have given reinsurance recoveries? Only for fire insurance 25,000 and marine 0. So look at the last item in your problem. The last item in your problem, 25,000 for fire insurance and marine insurance is nil. So write 25,000 for marine insurance and nil for 25,000 for fire insurance and nil for marine insurance. So now deduct this. 6 lakh minus 25,000 is 5,75,000. 5,75,000. 5,75,000. So there is no deduction. 8 lakh. 8 lakh. I am writing directly because there is no any deduction. So schedule number 1 is over and schedule number 2 is also over. Schedule number 2 is also over. 5,75,000 and 8 lakh. So now I am moving on to the next one, commission paid. So that is commission paid. Commission paid, schedule number 3. Commission paid comes under schedule number 3. So check out commission in your problem. how much they have given commission in your problem. So commission paid, that is fourth item, 6 lakh and 7 lakh. 6 lakh and how much? Fourth item, commission paid, 6 lakh and 7 lakh. 6 lakh and 7 lakh. So write commission 6 lakh 7 lakh. 6 lakh 7 lakh. So commission ceded is there? Yes. Yes. So commission ceded is also there. That is 8th item, I think. 8th item, commission ceded is there. So whenever commission ceded comes, it should be deducted. So less commission on reinsurance ceded. Commission on reinsurance ceded. Commission on reinsurance ceded. Reinsurance ceded. So how much? 1,90,000 and 2 lakh. 1,90,000 and 2 lakh. 1,90,000 and 2 lakh. So deduct that amount, check out how much you will get. If you deduct this, 6 lakh minus 1,90,000, 4,10,000. 7 minus 2 is 5 lakh. 4,10,000 and 5 lakh. So this is also done. So schedule number 3 is over. Okay. So next further moving on to the schedule number 4, that is operating expenses. Operating expenses. Operating expenses. Schedule number 4. Schedule number 4. So in that we have bad debts. So how much bad debts they have given? Bad debts. So that is 30,000 and 72,000. So write 30,000, 72,000. Then is there any expenditure which is required to take? Yes, there is. That is management expenses. Management expenses. So how much? Management expenses. That is 8,60,000, 24 lakh. 8,60,000 and 24 lakh. Take down 8,64,000 and 24 lakh. Directly enter 8,60,000 and 24 lakh. So now add this together. That's all, almost all item we have taken. So now total this also. So that is 8,90,000. This is 24,72,000. 24,72,000. Okay. So now we have to do total B. Total B. So total B is the total of 2 plus 3 plus 4. So what is the total of 2? 2 plus 3 plus 4. So what is the total of 2? That is 5,75,000 plus total of 3, 4,10,000 plus total of 4, 8,90,000. So put together 18 lakh 75,000. You two got the same? 18 lakh 75,000. The same way for marine. Total of 2 is 8 lakh plus total of 3 is 5 lakh plus total of 4 is 24 lakh 72,000. So put together 37 lakh 72,000. 37 lakh 72,000. 37 lakh 72,000. Okay, clear? So now we got the total B. So next is we have to identify what? Net profit, that is A minus B. Net profit is A minus B. So what is the total A we got? What is the total A we got? I think both are visible in the same screen, right? Yes, total A is how much? Total A 29 lakh 72,000. So 29 lakh 72,000 minus total B how much? 18 lakh 75,000. 18 lakh 75,000. So deduct, you got a profit of 10 lakh 97,000. 10 lakh 97,000. Clear? The same way for marine you do it. For marine, total A is 50 lakh 20,000. How much? 50 lakh 20,000 minus total B 37 lakh 72,000. 37 lakh 72,000. So 12 lakh 48,000 is the profit. 12 lakh 48,000 is the profit. 12 lakh 48,000 is the profit. So now close it down. So this is the revenue account in the books of Soumya General Insurance Company Limited. Revenue account in the books of Soumya General Insurance Company Limited. So we have completed the solution for this problem. So I believe you have understood. If not, again learn the format pro forma first, then try to solve one or two times by looking into the problem and solution, then second or third time without looking into the problem solve. Practice, then only you can learn. So you have to keep on practicing so that you will get to know how to solve the problem. So thank you so much. I'll come back with one more video very soon. Till then, take care. See you soon. Bye bye. And stay safe, stay home, take care of your family members. Bye bye.